Right, lads, we're back at it again. We've hopped back on the horse. We obviously, if you tuned into the last episode of the funded documentary, you would have saw that I breached daily drawdown on my ACG account, and it wasn't pretty that day. Well, depends on how you view it. I was so angry. I hit like three bench PRs that day, so it was a good day, but not a good trading day. So if you haven't seen that already, definitely check that out. But we've hopped back on the horse. We bought a couple 10K Equity Edge challenge accounts. The reason why I did that is because one, they're cheaper, so it's kind of better on the psychology. Number two, their trading conditions aren't actually too bad, and number three, um, it's just I feel like I'm ready. I feel like I'm ready. I feel like I'm here for it. That being said, though, first weekend we did have a losing week, so let's go dissect these trades, shall we? Right, so kicking things off on the Tuesday where we took our first trade on our Equity Edge account, we saw that London was immediately nullified for us because of the amount of high to medium impact news that was coming out across these two pairs here. And obviously, because they're correlated, uh, either one is going to affect the other one in terms of like what trades you take. So, say for example, let me explain that better, right? If you were to take a London trade, let's say at the last high impact news for the euro, the high impact news for the pound is still going to affect the price action of the euro, and it's likely to be choppy. So London immediately was nullified for us, you know, overall. So we just looked and we said, okay, cool. The next place that we'd want to look for is New York. There's no medium or high impact news for the dollar on New York, and therefore London close is the time that we want to go for. Yeah, high impact news right at 9:45, and then some medium impact news at 10 a.m. So if we go into the setup that occurred around that time, see this wick right here? This wick right here? As we can see, we tapped into this bullish order block on the weekly time frame. We tapped into this bullish order block on the weekly time frame, respecting the mean threshold of it, and reacted off it nicely. So that's what we got on the commencing week. Right? So if we drop back down into the 4 hour, we can see that that was this wick right here that tapped into the weekly bullish order block and respected it nicely. So now during London, we came back down and respected this down close candle really well as well. So respecting the mean threshold of this down close candle and running up nicely during London. So London made an up range. So, and New York was a continuation. If we drop into the hourly, we can see that 8 o'clock hour was a bit sluggish because it was consolidating, waiting for the high impact news. So what I was expecting is we were going to see a manipulation up into the 4-hour bearish order block. I'll just show you guys which order block I'm talking about. We're expecting a manipulation into this 4-hour bearish order block coming up into here, and therefore we're expecting lower prices on London close, seeing as London made an up range as well. It all made sense, right? So if we drop now, dropping into our M1, what can we see here? We can see that around the last news release, because that's what we were kind of waiting for. We're kind of waiting for a displacement lower on the sort of around the time where the high impact news comes out, because the medium impact news is going to be less important. So we're just looking for it, and we get the nice displacement in here, leaving behind this sell side imbalance on the M1, and basically waiting for our entry where it taps in, right? We tap in here, and price just violates absolutely violates that bearish order block on the 4-hour time frame, and we get a nice statistical loss in here. Here we're just targeting this low over here for 1 to 5, but yeah, we get a nice statistical loss in here. So I was actually very happy with this loss because it gave me great insight into the weekly expansion. I said, okay, cool, violating a 4-hour bearish order block like that is crazy, and therefore it's likely that we're actually trying to see a bullish expansion on foreign currencies this week, so a bearish expansion on the dollar. So knowing that now, I've switched my weekly bias in mind, and we can go over to the next trade. Now moving over to the next trade, I wanted to trade London. Now usually when London, when news is kind of past 3, I don't really like trading London, but at the same time it's like, might as well, right? Because it's not too hectic in terms of news. So I was like, you know what, London is doable. Now in the back of my mind, I knew that if you have medium or high impact news, it's going to supersede this news that's coming at 3 a.m. So the real move is going to happen at around 4 a.m., around 3:30 to 4 a.m. That's when the real move is going to happen. Did I listen to my gut? Did I listen to what I know? No, I didn't. Instead, I tried to believe that it was going to be different from what I've learned, right? And part of that is because I haven't been doing this for that long, and like I notice things very quickly. So because I've noticed it very quickly, I'm like, wait, is it actually like that though? And yeah, you know, I learned painfully that yeah, it is exactly like that. So coming back to GU, because I didn't want to trade EU, because when there is medium or high impact news on one of my pairs, I prefer to go for the other pair, right? So going back to GU, not EU, because of its medium impact news nature. So what we saw was actually a 4-hour breaker here, right in here, as we close above it. And the reason why is because this is the up move prior to a run liquidity, so you know that is a ICT bullish breaker. So we came down into this breaker here, so we're expecting higher prices during London. Now if we drop into the hourly, let's drop into the hourly first. What did we see? We saw nice consolidation for Asia. We saw that the Asian high is posted at 8 p.m. The previous day, and then we see that the Asian low is kind of posted on the 6 p.m. candle. So we said, okay, cool. So we're looking for a sweep on liquidity on either side. So we took out sell side here. So okay, cool, sell side's been taken. So now we're just waiting for our market structure shift. So we drop into the M1. We see that price is consolidating in here. It created our fake institutional swing points right here, because this is not when the move is supposed to happen. So this looks like our breaker swing, and it looks like we created a market structure shift in here, leaving behind our fair value gap, a little bit of consolidation above it before tapping in. So it looked like a good unicorn setup actually, but in here we were targeting the Asian high, but it didn't go to plan. And the reason for that is simple, because I didn't trust my instinct and know that the move isn't going to happen right now. The move is going to happen closer to the medium impact news. And that's exactly what happened here, right? The move happened closer into the medium impact news. Now here we had our failure swing, institutional swing point, followed by our market structure shift ever so slightly above these relative equal highs in here, and that left behind our fair value gap, a little bit of consolidation above our fair value gap before tapping in, right? 403, right on time to the pip, sniper entry right there. Now, right here, we would have still been targeting the Asian high because I did believe that this day was going to be bullish because we took sell side and we didn't take buy side. However, what would have been unique about this? We hit our 1 to 3, and our 1 to 3 we would have took off half of the position, banking 1.5%, and then moved stop to break even. And yes, we would have been stopped out, but we would have banked 1.5 hour had we just stuck to the observations that we made in the market. But we live and we learn, and you know, we won't make the same mistake again, hopefully, inshallah. Right, moving on, the next setups that I took were on EU, so we'll move over there. Dropping to the daily, what I saw is that, let's just delete this just for the sake of a clean chart. I saw that we flipped this sell side imbalance on the daily time frame as well. So now this became a daily investor value gap. So moving into the 25th, in on the 1 minute here, what we can see is that price came and tapped the mean threshold of this daily sell side imbalance and respected it nicely. Then we formed our institutional swing point in the form of a failure swing, create our market structure shift in here. Now, I am trading the London close time frame. Obviously, we made a downward range in New York, so we're expecting a London close reversal into the consolidations. Taking out the closure of the fair value gap, and here for this trade, I took half of the position off at 1 to 1, so around here. And then as we can see, I moved stop to break even, and then price came back right back to my entry and then hit my TP. So it's a bit of a bit of mixed feelings about that, but at the end of the day, you can never be upset about taking profits, ever. Never should you ever be upset about taking profits. So yeah, you know, what can we do? We know that London closes notorious for retracing back to your entry, and you know, doing a whole bunch of stuff before it goes and hits your TP. So we know London close press action, so we can't really be upset with this. But yeah, this was good for mitigating our drawdown. Moving on to the next setup. So if we check the economic calendar, we can see that London close is what we're trading here. Another thing to add, right? Just a side point on why I traded London close on Thursday. The reason why I traded London close on Thursday is because what I've seen before in price is, yes, you have high impact news on New York, and then there's likely to be a move, but I've also seen there be choppy price action due to the fact that there is some high impact news delayed around London close. So I just opted for the London close high impact news instead of trading the New York one, because I don't want to risk choppy price action, especially when we're, you know, in on the M1. It's not ideal. But yeah, moving into Friday. Friday was looking like a chill day for all of the trading sessions, whether it be London, New York, or London close. So I just chose to trade London. In order to understand what I was looking at here, we do have to start from the daily time frame again. And I guess you guys are noticing a pattern. I only key off of daily and 4 hour and above PD arrays. So looking in here, what I noticed is we have what? Our swing high, followed by our lower high, and then our market shift downwards with these candles in here. So what does that leave behind? That leaves behind our mitigation block in here. So using our fib levels, we can now get fib levels for this down candle right here. Right? And this is our mitigation block. So we get our fib, we drew it from the open of the down candle to the close of the down candle, and we see that we're either looking for price to come into at least the 61.8 retracement level or the 50% retracement level and respect it and have a market structure shift on the low time frame. So let's go and check that out. What you guys can see here is this is our 50% retracement level. That means we have approached our 61.8 retracement level. So knowing that we've approached our 61.8 retracement level, and the reason why I referenced the weekly expansion at the start of this explanation is because I understood that later on in the week, let's say like Tuesday, Wednesday, I basically realized that the weekly expansion was going to be from the order block on the pound that we tapped into in the weekly time frame, or you could say the inverse fair value gap that we tapped into on the euro, all the way up to this mitigation block. That's what I was predicting the weekly expansion was, and especially today's Friday, so I'm like, okay, cool, this is the last move. So I'm like, okay, cool. So everything's lining up now. So I'm like, okay, nice. Let's go into our M1 time frame. So I'm like, right. So we create what? Our breaker swing in here. We have a down move prior to a run in liquidity. Right. We have, yep, our down move prior to our run in liquidity, forming our breaker swing. Now, what I'm looking for is the fair value gap, right, guys? To break below this low. Now the problem is that fair value gap doesn't form an M1 time frame, and I was, obviously doing this live. So in my assessment, the fair value gap was about to form like right here. So I took it there, and I took it a bit like hastily. Now, why did I get stopped out of this trade? The reason is simple. Because when you don't see the fair value gap on the M1 time frame, search for it on the higher time frames. Go up to 2 or maybe 3 minutes. So if we go on a 3 minute time frame here, we can see that what? The fair value gap was formed. On the M3, the fair value gap was formed, and it was clean. It was clean, look. The fair value gap was right in here. This candle created the market structure shift, created the fair value gap, and then came up right in there. So instead of taking the entry there, the entry should have actually have been right in there. Sniper entry. That's what the entry should have been. So the lesson is here that I learned from this trade is that if you don't see the fair value gap form on the M1, search for it on the high time frame, search for it on the 2 minute, 3 minute, until you actually see the fair value gap and you see one candle which actually creates the market structure shift. So yeah, this could have been a nice trade, but yeah, we got wicked out of this one. But we learned from the loss, so that's good. Learning from the loss is good. So overall, that was the last trade of the week on Friday. I just took my 1% loss and went about my day, and that was it really. Took my 1% loss, went about my day, and we finished the week, I believe, down just a little over 3% with commissions. So yeah, that was really it. Overall, guys, very exciting week up ahead. And this, I'm gonna make this a weekly thing where I release episode 2, 3, and we can just review the trades together, and you guys can really see the journey. I'm happy that I actually started from drawdown, and the reason why is because I get to see him really like that. Am I really like that? Can I crawl out a drawdown and still pass the challenge? I get to see if I'm really, really like that. So, I'm pretty sure you're looking forward to seeing whether or not I'm like that too. Spoiler alert, I am really like that. But yeah, looking forward to mitigate the drawdown this week. This week is an exciting week, FOMC, NFP, all of that stuff. So, gonna be sitting on our hands for a bit, but I'm pretty sure we'll get some opportunities this week as well. But as usual, if you guys enjoyed, please like, comment, subscribe. It really does help and allow the algorithm to do its thing. And yeah, follow me on my journey. Ready.